Hey traders, today is going to be a follow-up video to the one I put out last week describing the easiest day trading setup part 1. This week we had several opportunities to take advantage of the setup that I showed, and I'm going to describe them to you. So the first one was on Monday. We had DOCU. As you can see, out of the gate it ripped. It found resistance at the $58 psychological level and consolidated just like we talked about. It touched it 3 times, a 4th time, and then we got that beautiful curling action right here into the level. So what do? We hopped in long right on the break and we rode it up and took our profits up here. So that was the first trade. The next one is, guess what? Boom, the next day. Again, this time it dipped out of the gate. It came back up to some of the previous days' price action, on up, continuing to the $59 psychological level. We got one touch, a third touch over here, and it came up, rode this nice trend line. We're consolidating again under the $59 level, and then boom, it broke out and we went long. Okay, moving on. Next up, we've got BA, and if I remember correctly, this one was ripping on news. So what happened? It broke through this 369 level, which is actually a decent entry with a similar setup, but I personally did not take it. My buddy Rock took it and crushed it. But anyways, we watched it all the way. I'm usually not going long when there's this huge amount of upwards pressure, but on this one in particular, we started to see my favorite setup over here. So it came up to this 364 level, a nice little pullback, tested it again, pulled back, put in a higher low, started to curl up again. We pushed up, another little pullback, even smaller, higher low, and then bam, 364 test, and we get this beautiful curling action. You know what that means. So when you see this curling action and these higher lows in this incredibly bullish stock, boom, your safe bet is going long right here on the break of the psychological level. You could put your stop down here, you could put your stop down here. Either way, you had opportunities to take profits pretty much anytime you wanted to after hopping in this trade. It was awesome. So after locking in a win on that trade, let's go ahead and move on to the next time we saw the setup. That would be Apple the next day on 9/11. So on 9/11, the SPY was pretty much rocking. We were moving up the whole time that this formation was building. Had a nice little push out of the gate. Came up, we found some resistance up here. It was a little bit shaky, but we still formed this nice trend line and with higher lows consistently coming through, and we popped out. So this one is a little bit different than usual, but I still consider it the same play. So we had this little ceiling up here. It broke through and started consolidating really tight under this psychological level of 221, a whole dollar amount. So came over here, it dipped back, the trend held. It was a wick, which usually signals that there is a lot of people that don't want to see this go down if it wicks up. So what you can do is play it just like you would any other time, and as soon as it cracks through, we get this wick back to the trend line. As soon as it cracks through 221, bam, you're in long and you hold it. Start selling anytime you feel a little bit uneasy, or your risk on this one isn't very much, so you could pretty much sell anytime after this first candle and be happy. Finally, I want to close out with one that I didn't like so much. So this one was Lulu. On this day, we dumped out of the gate to support, and then it basically did a red to green move where it went straight red and then just totally V-shape reversal and rocketed all the way up to basically around the 195 level, but it wasn't exact, and it kind of consolidated there before failing. It made support back at the yesterday's kind of, I don't know, it's more of a price area, so I wouldn't say this was a strong support by any means, but it reversed, went back to 195 for 2 more touches. So you could say that it came down and formed a higher low, and this would be a possible indicator that you could hop in long here over 195. But for me, this increases my stop, and I'm not one to want to hop in a trade after some, pretty big relative green candles. Now, you could play this, but in my opinion, this was a little bit more risky than some of the other setups that, had the very clear psychological levels and very clear consolidation and then the curling action into it. You could say this is curling action, but I disagree. I would say this right here is more of a curling action than this. So I would personally go in on this trade very light. I would take maybe a quarter to a third of my normal position sizing and try it out for a scalp. But as far as going in with my normal size, this just isn't the same quality of setup as some of the previous trades. So that's my opinion on this setup. Here's a few real life examples that played out this week, and I'm sure there's going to be more to come. So stay tuned.